Hello and welcome back to my course Trading News using binary options, and today I'm going to tell you what news releases you should take into consideration when you trade forex or binaries on currencies. It is extremely important for all traders to learn about the various economic indicators and forex news events and releases that shape the markets. Also, you should know which data to look out for, what it means, and how to trade it. It will help you to become more profitable and sets up the road to long-term success. In my previous courses, I mentioned that trading forex should be based on technical approach, but you also should be aware of the fundamental story, which is ultimately driving the markets. And in this lecture, I prepared top 5 market news events you need to know right now. The first is central bank rate decision. Each month, the various central banks of the world's economies meet to decide over the interest rates they are responsible for. The decision they have to make is whether to leave rates unchanged, rise rates, or lower rates. And the outcome of this decision is extremely important to the currency of the economy and as such as to traders. An increase in rates is generally seen as bullish for the currency, meaning it will increase in value, and a decrease in rates is generally bearish for the currency, meaning it will decrease in value. Whilst an unchanged decision can be either bullish or bearish, depending on the perception of the economy at the time. Within rate decision, you should also take a look to minutes. The minutes give a full account of the policy discussion, including differences of view. They also record the votes of the individual members of the committee. Generally speaking, if the central bank is hawkish about the inflationary outlook for the economy, then the markets see a higher possibility of a rate increase. And that is a positive for the certain currency. Some of the best trades you can make come from rate decision. For example, since ECB cut the Eurozone rate to 0.05% in September 2014, EUR/USD has since fallen by over 2000 pips. The second important news is GDP. The gross domestic product is an important indicator of economic health in a country. A country's central bank has expected growth outlooks each year that determine how fast a country should grow, and it is measured by GDP. When GDP falls below market expectations, currency values tend to fall. And when GDP outdoes expectations, currency values tend to rise. For example, when Japan's GDP shockingly shrunk 1.6% in November 2014, the Japanese yen fell sharply against the dollar, as traders anticipated further central bank intervention. The third is CPI. Consumer Price Index is the most widely used inflation measure out of the various economic indicators. The index gives information about the historical average prices paid by consumers for a basket of market goods and highlights whether the same goods are costing more or less for consumers. Central banks monitor this release to help guide them in their rate and policy setting. If inflation is seen to be evident and moving beyond a certain target, then interest rate rises are used to counter this. In November 2014, Canadian CPI beat market expectations of 2.2% and came in at 2.3%, with Canadian dollars subsequently traded up to a 6-year high against Japanese yen. The fourth important news is unemployment rate. The unemployment rate of a country is crucial to markets given its importance to central banks as an indicator of the health of an economy. Higher employment leads to interest rate rises, as central bank aim to balance inflation with growth, and as such this figure draws huge market attention from traders. Alongside the unemployment rate, there are two most important labor statistics. They are US ADP and NFP figures, released each month, with NFP taking prime position. Given the market's current attention to the likely date of a Fed rate hike, this figure is growing in importance each month. The ADP data is considered an important predictive tool for NFP, and it is released beforehand. These indicators will be described in all details in our future lectures. The fifth important news is FOMC meeting. Although the central bank meetings of all economies are extremely important, America's Federal Open Market Committee meeting requires more attention as the United States dollar is currently the world's reserve currency. Each month the committee meets to set rates and to give its pronouncement on current economic conditions and the effectiveness of current monetary policy. The committee is made up of members which vote at each meeting, with hawkish members, those in favor of a rate rise, and dovish members, who favor a lowering of rates. The statement released by the committee is analyzed by traders looking for clues as to how the central bank will behave in future, and it can cause large market moves. Let me show you an example. FOMC meeting can cause huge market volatility, as seen on March 18th, when EUR/USD spiked up 400 pips in a matter of minutes, as markets perceived the meeting to be USD negative. These central bank meetings are where we also learn about any changes in monetary policy, such as the announcement of quantitative easing. The key thing with all economic indicators and news releases is not just what the actual release means, but how the market anticipates the release and subsequently reacts to it. This is where the trading opportunities are created. I would like you to notice that we can't define all the impact of a certain news release to a currency pair, because some of releases can't be measured quantitatively. However, sometimes we can say exactly negative or positive they are. What I want you to learn from this course is that you should pay much attention to these news releases. Make a research yourself and find your own trading pattern. Of course, some patterns and statistics will be shown in this course, but I highly recommend you to expand the number of releases you trade to diversify your risks. Thank you for your attention. If you have any questions, you may ask them here. And now it's time to go further.